Morning, everybody. For those who don't know me, my name's Steve Maarbani. I'm a partner in our legal business, and my practice specialises in funds management. In particular, we establish private equity and venture capital funds for clients, and more over the last few years, we've been talking to the venture capital and private equity sector about the disruption that's facing them, and in particular, what impact will alternative finance have on the way those sectors work. And so that's led us to discussions with clients about equity-based crowdfunding in the venture capital and the private equity space. Through that work with peer-to-peer lending and with the establishment of the VentureCrowd business, we've become very close to the strategy and the opportunity behind equity-based crowdfunding in the Australian market. But what I want to talk to you about today is not equity-based crowdfunding for emerging technology companies or private equity businesses, but how that model can translate into real estate and what opportunities that has for Australian real estate participants. So what is it? It's really very simple. It comprises three very simple elements. The first is the asset itself, the real estate, a piece of real estate, a real estate opportunity, a real estate venture, a real estate development. Add to that the financial product, whatever that might be, debt, equity, a hybrid of both of those things, and overlay that with distribution through technology. Now the theory is that real estate crowdfunding allows a broader range of investors, the crowd, to make smaller investments into real estate assets and opportunities that they may not otherwise have had the opportunity to invest in or to have exposure to. And when a platform operator aggregates smaller investments, they become a much larger pool of new capital, allowing the crowd to do some powerful things, like to buy properties they couldn't previously afford to buy, to lend money to homeowners, to lend money to developers, even potentially to take equity stakes in the beginning of the development process. Now, all that sounds very simple, right? And for those who are real estate veterans, I know what you're going to say to me. You're going to say to me, there is nothing novel about anything you've just said. We're already doing this. We already have real estate syndication. It's been happening for years. We already finance in this way by pulling things. We're already doing it. And the problem with that statement is it reminds me of our mate, Jim Keyes, who said, Netflix doesn't really have or do anything we can't or don't already do ourselves. So be careful, folks. Now, Jim Keyes we can forgive because he was at the precipice of tech disruption. We are not, and we have the benefit of all of that history. The difference is this. The difference is it's subtle and it's profound. It is the user experience. And the key to that is technology. The addition of the technology element at the end is what changes the game. If the real estate crowdfunding platforms get the execution of these platforms right, they will be able to do a number of things that traditional real estate syndication and finance simply cannot do. And I've talked about them before, but just to contextualize it, information, right? The ability to offer consumers digital investment tools to help distribute more and better information targeted at what interests them, targeted at what is affordable for them. Because if they're on Pocketbook, for example, I might know how much discretionary spend they have every month. And if you overlay all that with robo-advice, all of a sudden you've got a situation where I can go online, I can put in my parameters, what I spend, what I earn, what I want to do. Robo-advice can tell me how to allocate my discretionary investment spending, and then I can use a real estate crowdfunding platform to build a diversified portfolio into real estate for 10 grand, all without ever talking to anybody. I know that's the extreme, right? But it's possible. Secondly, scale. The technology allows real estate syndication and real estate finance to scale way beyond face-to-face bricks and mortar operations, to unlock and connect with investors domestically and globally quickly and cheaply. Thirdly, trust. We talked about trust. If they get it right, if they build in the right social media tools, the right connections with your networks, you will be able to see whether or not your decision is validated by your peers. Now, for me, that's meaningful. And fourth, and this is my favourite one, is entertainment factor. If operators get the mobile platforms right and the UX right, and you add to that a little element of gamification, all of a sudden you've got the potential to turn real estate investing into entertainment. So the key difference here is technology, and the success or otherwise of the real estate crowdfunding platforms will turn on the quality of the user experience driven by the tech. And in my view, that is the one big ball and chain around some of the more traditional real estate processes. And it was certainly the big ball and chain around some of the other industries that we looked at earlier.